Now, staying with the markets, the National Stock Exchange has extended trading hours for at least the interest rate derivatives, and the kind of market hours that have been increased for interest rate derivatives is up to 5 o'clock in the evening. So this new timing is going to come into effect on the 23rd of February. Until now, of course, the trading window for these derivatives closed at 3:30 in the afternoon, like the equities. So we've run a Twitter poll as well, and we've asked respondents about the timing, whether it should be extended for equities or not. And surprisingly, the results are almost evenly split. A little more than half of the participants are opposed to an increase in the trading time, and about 45% of the voters who've put in their votes, they want more time to trade in the equities. Some are arguing that the Indian market is now deeply linked with global markets, and an increase in trading time is going to offer a larger window to react to global developments. And then there are others who argue that trading, and overtrading at that, leads to losses, and it also has an adverse effect on the mental health of traders. So let's find out from our guests who are joining us on the show what they make of it. Of course, we've got a great panel. Deena Mehta is Managing Director at Asit C. Mehta Investment Intermediates. Deena Mehta joining us on the show. And Kamlesh Shah is also with us, the President at ANMI. Great to have you both with us. Let me ask you first, Deena Mehta. I recall that back in 2009, it was the month of December 2009, when SEBI gave an okay to extend those trading hours. The BSE and the NSE fought out that battle, and it was a big clash whether the markets should open at 9 in the morning or at the usual 9:55 at that time. The NSE wanted the markets to open at 9 a.m. and they won that battle. But ever since, we've been opening at 9 a.m. and now it's part of our lives. What were the lessons, you'd say, Deena Mehta, about the market's extended hours? What have we learned from that piece of market history?
Unfortunately, we never learn from anything. That is the big because any change which happens, especially on regulation front, should be accompanied with a cost benefit analysis. One needs to identify whether there is a need to make the change, and once the change is made, somebody needs to observe and then see if the change really benefited anybody. Did volumes go up? Did the investors benefit? Did the money move faster? Like, for example, T+1. Is the money moving faster? Are the customers able to pay? Are the FIs able to meet the deadlines? So unfortunately, in India, I had published a report almost 7-8 years ago on some of the cost benefit analysis of the changes which had been done in previous 2-3 years. And unfortunately, I had come to a conclusion that not much has really impacted, and there was not of much use to the market, the changes which were being done. So I feel that, this whole process of do something and review it, that is totally missing in the Indian markets. We have a one-way traffic of, constantly in a year, almost 500 circulars are issued by SEBI and exchanges, and 500 software changes are to be made on the system and on the fly. So I think that, this is entirely, somebody thinks about it and keeps on issuing circulars, and then you just fall in line. So I feel that if some justification, some study is precedes these kind of changes, then people will appreciate it better, accept it better, and the targeted gains can actually be achieved. So that is what
a little more scientific approach is what Deena Mehta is saying, rather than just going by experience. Mr. Kamlesh Shah, what is your perspective on this? You would possibly go with experience as well. And it's important to say over here that there are no real benchmarks as such. If you look at Shanghai, it trades for about 4 hours. Frankfurt trades for about 14 hours. There are others like London and New York that are somewhere in between. The probable space that we're looking at, it seems to propose that we are going to go longer by 1 hour and 30 minutes if we go all the way until 5 o'clock, which means the markets are going to trade in our part of the world for 7 hours and 45 minutes. In your opinion, is that kind of timing good? Is it what we need?
Yeah, thank you. I have little different opinion, though I am a great follower of Deena Mehta. but still, here I have little different opinion. In the sense, things have changed a lot in last 20 years. Uh, we were trading in ring earlier, where the timing was just 2 hours. Thereafter, in 2009, as you rightly mentioned, the timing were increased to 9 a.m. And now, with the technology, especially we have seen during COVID period, that we could work effortlessly with the technology, and most of the trading has shifted to algo trading. So now things have changed, and we have to change with the time. And I believe that the investor base also has increased rapidly. During last 3 years, the investor base has increased to almost double, and now we have 22 crore UCC already in place, and things are changing very fast. We need to give opportunity to people who cannot participate during the normal market hours, which is the office hours. There are many people who would like to join after the working hours, and the current volatility in the market also supports the reason for extending the market hours. There is a lot of volatility happening after 3:30 in the afternoon, and Indian investors are helpless. They are not being able to, hedge their position. Again, one more factor that would go is that price determination. Now, we are following SGX Nifty, and we are also vulnerable to motivated reports. This issue also could be addressed. So, if we have longer trading hours, at least for index product, that will provide, opportunity for investors to hedge their position. This will attract more investors with flexibility to invest of time of their choice. So I believe that extension of market hours in a phased manner and with certain selected products to start with could be in the interest of the market.
So, yes, we have opposing views over here. And on that pointed question, Deena Mehta, how do you think extended market hours are going to benefit traders who seem to be losing out on capitalizing on these major world events that Kamlesh Shah is talking about? Events like, say, a Fed rate hike. Because when those market moving events take place, our markets would be closed for business. So, how much were they losing out on account of this, in your understanding? And will these extended trading hours help significantly, at least on this count, Deena Mehta?
I'm not against the extension of market hours. All I am saying is
No, no.
that the
Yes.
process in determining whether it should be 5:30, why not 7:30, why not 9 o'clock? So there has to be a very transparent decision making process, so that who is the targeted beneficiary? According to Kamlesh Bhai, are the targeted beneficiary of people who are not able to trade? Can people not trade on the mobile during the lunch hour? They may put a trade or whatever. So all I am saying is that the objective, when we start to do something, that has to be very transparent, and we need to understand that are we going to get the benefit which is there. Because if you see today the trading, what happens, there is huge amount of trading in the morning, and during the closing time there is a intensity in the trades. Rest of the day, if you see, the intensity is very very poor. So then why is that intensity poor? Because since entire activity happens in the morning and in the evening, people who want to put a trade or take advantage of price, they also get concentrated during those hours. So by extending the hours, are we going to create a longer lull in between the two? I think some kind of studying the current market trends. See, these are general statement that Fed is open. I would say, why not 5 o'clock? You should keep it open till 7:30. So that is what I'm saying, that if there is a proper decision making process and involved process, if it were to happen, then we would see more effective results. That is what I want to
No, fair
emphasize
enough.
on, because recently we are seeing so many changes being made in the markets, and we are just not able to grasp as to what is the real benefit which will occur to us
Yes.
by virtue of these changes.
But can you really assess before actually doing it? Also, Kamlesh bhai, you need to come in on this. As far as certain facts that would appear before us is about costs. There would be higher costs involved in keeping the markets open for business longer. It could be a negative for brokerages. Do you think the higher costs could outweigh the positives of higher volume of transactions? Won't brokerages have to shell out much more for tech, for people doing their tech, spend more on risk management, etc.?
I fully agree with you. The cost benefit ratio has to be favorable, uh, and the volume are not going to be jumped by a significant amount. It is going to be a gradual process. But we have to be prepared. Indian markets are the most automated market in the world. SEBI has already permitted exchanges to operate with extended market hours. There will be always opposition whenever there is any reforms, but market get adjusted over a period of time. We have to take all precautionary measures, and exchange and working groups are have their plans in place. We would also recommend that to avoid any abrupt changes, it can be a gradual process which can be adopted in a number of hours products. We may start with index products. Any feedback, suggestions, and directives can be taken into account in the next phase. Back office file and timing will also kept in mind for trouble-free transition. It is now, I don't believe that it's a question of yes or no. It is question of when and how. So we, with the technology that is available, with the increase in the investor base, things, and we don't always look for our own interest. We have to look interest of the investors. When the investor base is increasing, we have to provide. Some you were also talking about other markets timing, but see, if you see Globex of CME, that is running for round the clock for the last 3 decades. So if we have to be leader uh, market, then we will have to uh, try new things,
Right.
try to give opportunity to people.
Right. So you're saying a gradual shift from what was to what can be is a good strategy to go with, and you don't really need to see the absolute pros straight off. It's something that does show itself up over a period of time. Deena Mehta, what do you think as far as the possibilities are concerned? We are starting from the interest rate derivatives as far as extension of timing is concerned. Do you think that's a good place to begin?
Yeah, interest rate derivative is a good place to begin with, because even currency markets are open till 5 o'clock. So it is not a bad beginning. But you see the entire infrastructure today, like the stock exchanges. If you every day there are delays in the final file, the payouts file, the DP files. They are coming through. Brokers wait and wait and wait for the final files to come through. So if we are going to cut down on that processing time, what is going to be the pressure on the depositories? Like so many changes we make, we are supposed to upload allocation file. Now the system is not ready to accept it, because for them also the changes which are being made are too frequent and too huge, which completely disturb the system. So when I keep on insisting on the process being done, even in the current situation, I don't think that the infrastructure is completely geared to give us a completely smooth and timely post market work which is being done today, because post market work also is equally important, and we can't just go on trading and not bother about settling. So I think the whole ecosystem, which is not, we don't have to just talk about brokers. I think we have to talk about exchanges, we have to talk about depository, we have to talk about banking system. An entire ecosystem needs to be tuned to meet to these deadlines, which I personally, I am a hands-on kind of a broker, and I personally feel that still we have some gaps in the system, and we need to, if we have to cut down the processing time by 1.5 hours, then because it will not stop at interest derivatives, we will move on to other products also. And once we do that, then the entire system has to be 100% tested, and everybody must be given time, like the vendors, the broker software vendors. I just heard that they made an association because of the frequent too many changes which are being made into the systems. So I think one needs to look at the ecosystem, and the current ecosystem is really not prepared.
Right.
There are many delays which happen very frequently, and I think those issues must be addressed before we go on for other including other indices.
So, Kamlesh bhai, Deena Mehta is talking about a more graded approach that have the infrastructure and then gradually move up the scale. But as far as brokerages are concerned, do you believe the time between closing and opening of trade are going to be enough as we introduce more products for the kind of operational drills that you have to do, for the kind of reporting that has to be done? Is the lesser time going to actually work out when you expand the number of products that are going to come under the extended period of time trades?
I said, I mentioned in my comments that we can start with indices option in indices futures, which is, which does not require any cash settlement. I'm not talking about cash market to start simultaneously. Because cash market will have many other angles also, and naturally, we will have to maintain the timeline and the settlement process, in check. So all that I'm trying to tell you is that if we have at least indices futures to be traded, then we will get right feedback. We will get a response of people. We will have many other inputs coming in for the extended trading hours, and possibly gradually we can move to the next phase depending upon the comfort level and the convenience of all the stakeholders.
Question that many are also talking about is work-life balance, a term that we hear much more post-pandemic. If that balance goes off again, are we going to build a healthier future? Because that's an important piece to consider. But this debate, of course, has carried on for a while, and typically, as it happens, we get used to our new reality, we adapt, notwithstanding all the pros and cons that we discuss in a debate. Even so, it's important to highlight what we are getting into, and for that, I have to thank our guests for joining us on the show, Deena Mehta, Managing Director at Asit C. Mehta Investment Intermediates, and Kamlesh Shah, the President of ANMI. Thank you both for joining us on this discussion here on India Tonight.
Thank you.
Thank you.